Okay, I think we have everything set up. Okay, everything looks good. Welcome to the channel, guys. I appreciate you guys tuning in. Um, yeah, we're gonna go over the mark today. It was kind of a crazy day. We're gonna go over the sticky notes posted on the social media, and yeah, we'll go from there. We'll also go over a few of the parlays that I posted for today, and yeah, go from there. Let me just do a couple things real quick, and we'll get this show on the road. Okay, before we go into anything, you guys know I'm not a licensed financial advisor. I'm just a guy. I make mistakes just like everyone else. Nobody's going to be perfect in the stock market. As you know, for me, in the short term, everything is just a big voting machine. You know, I have a vote. The guy next to me has a vote, and the guy next to him has a vote. Some people have a bigger vote than others. That's part of the game. Uh, so yes, I did make a couple mistakes today, but um, my goal is to learn from my mistakes, try to stay positive, and go from there. So we're gonna pull over the first sticky note of the day. So this was our first post of the day, and I will say the 79 views on this was a very nice increase from the first one we posted yesterday, which got 22 looks. So if you're looking at that growth rate day over day, that's pretty damn good. So I was pretty happy about that. If I were to take a positive from today, but starting with the first sticky note that I posted, number one name PayPal. That is what I have up on the chart today, and more in particular, what I said 50-day moving average is at 74.50. Respect 74 flat. Trendline meets in with 72 flat. I did respect the 74.50. I actually went against my note and I didn't even respect 74 flat. And I'm going to explain why I did that. We're going to hop over to a 15-minute chart. So we know that the 74.50, this is this line right here, is our line. Now why do I like this name in particular? Heading into the day, here's the close from yesterday. We have a nice fresh positive break. Three consecutive candles, good volume that came in with a nice decreasing volume. A little bit of a wick. I'd like to see that wick be a little bit higher, but I was anticipating a pullback into that 50-day where I was expecting buyers. Now, obviously, the market came in a little bit bloody off the open and continued bloody. We'll go over the SQ today. But this wick top right here, here's your gap fill. You gap down. Anything that you buy, it, it's worthy of a trim off of this gap fill. This was a screaming gap, and which is why I was anticipating the retracement back down to the 50-day and why it was my number one name. So let's go to a 15-minute chart. Now you can see this opening candle on the day is just a red engulfing. Now I did have that order off 74.50. Let's go to a 1-minute chart and look at how this order acts. You can see right off the first minute of the day, the low of this candle gets down to 74.56. In the second minute of the day, I get triggered on my trade. Now there is some buyers there. The buyers come in, about 3 minutes of buying, and it gets hard rejected. This level gives up. Now looking at the first 15-minute candle on the day, when now this was the main reason why I decided not to buy 74 flats, because it was just straight red engulfing. Now the low of this gets down to 74.02. Right now on the note I say respect 74 flat. Does this look like a candle that should be respectable for the 74 flat? Now obviously I know I put it on the sticky note. I wrote the sticky note up before before the market even opened. But when I seen this was very alarming to me. Now I also did have a trim on PayPal up off the gap fill. and you can see the wick that we wick through and the volume increase that is leading up to that. You see that? So one, PayPal was a reload for me off the 74.50, and two, I ended up cutting the shares that I bought this morning off the 74.50 right in the middle of this candle. Sometimes it sucks, but yeah, no, and I am still holding PayPal. And I didn't even buy the 72 gap fill. As you can see, we have the gap marked for the 72 gap. Now also what I say on the sticky note is trend line meets with 72 gap, downside risk, 72 gap. So there is some positive to take off this, is that this 72 gap was respected, and you can see the direct correlation. Uh, for me to say that the 72 gap is going to meet up with the trend line and we get a wick low 71.93. Now I did not execute the trade here. There was a lot going on at the time, and I did not execute the trade. And I don't like to let emotions take over as my trading. But another one of the main reasons why I didn't want to buy it is look at where our relative strength is on the 15-minute chart when we meet up with this gap fill and the trend line. For me, the relative strength being deep in the oversold area to me is not a favorable bet. I would not have expected this to retrace up for $1. It does retrace up to $1. Now, the tops, you see how we wick right into this previous low? It's already respecting the levels. So now for me with PayPal going forward is how long can we, now that this gap is filled, is this trend line going to be respected? Are we going to be able to work through some of these retracement levels? And if that is the case, you can see the 73 is your first retracement. Can it work through some of these retracements and catch a bid and work back to, the overall goal is that on the daily is that this is going to catch a bid and reclaim that positive on strength, where I think, this is a respectable downtrend, and I think it's potential that we can still get outs on this name up at this 85 gap, which we do have a gap down. But for it to get up to this 85, it's going to have to work through this downtrend, which is why I think this is in some middle ground. Potentially this could actually break this uptrend and give you a flush further to the downside. So that was PayPal. I'll try and move a little bit quicker with that. But yep, that was a losing trade that I took today. And losing trades are part of the game sometimes. So the second losing trade that I took today was SPG. This was a new position that I started yesterday at a 113.75 entry. Now I say SPG, be ready for the pullback to the 50-day. 112.50 is your previous highs, 200-day 111.50. Now I did buy both of these levels and I did sell the position today. Sometimes it sucks to take a loss, but you have to understand uh, where the levels and when the levels give out. Now we can see the price is above that 200. So this is one that I probably paper in. I could have held it, but one of the things that was alarming to me is that they report earnings after hours. So we can go over and look at the 15-minute chart real quick. Now you can see we get an open price underneath that 50-day, and it tries to reclaim it. Now when it reclaimed that 50 days when I took my first trade, now I can see this red engulfing through the bottom of this. I did not panic. It's not the most amount of size, as it's a new position. I'm not just sending the boat. There's probably a better term for that, but I'm not just sending the boat on a new position. I'm trying to work myself into a position. Now you can see a lot of blood was in the market. You can see red engulfing straight down to this 1150. I tried it off 1150, and I end up getting out of this underneath 111 as it gave out this previous high. So not the greatest trade. It ends up wicking for a bottom low of 109. At the time I was probably telling myself, hey, that was a good choice to cut this position. And even when it retraces back up, it rejects 111, but now you're getting that full green engulfing with good volume into the earnings report. It's still relatively weak on the day, but it reclaims that 111, and now we're going to probably set a close above that 111.50. So if I wanted to re-enter right before the earnings report, one, I have to risk that this isn't going to have a gap down below the trend line, which you can see we have our ascending channel that we have marked. It doesn't have the strength to get up to that 117, which is a gap fill that we have marked right here, and then you have your previous lows. Uh, all in all, this is a company that I'm going to be keeping my eyes on. I think that valuation wise, it is fairly priced. And I think the chart represents itself for a long, even if it were to retrace, how is it going to act with this longer term trend line right here, where you get action, second point of contact, and that third point of contact got really good action. Long term, I think this is a pretty good company to keep an eye on. And yeah, I'm going to be looking forward to looking at that earnings report. So let's go to the next sticky note of the day, where we talked about DAL plus Disney are safe names with solid charts. I think both of them have solid charts. 34 flat for Delta and 101.30. It actually, the 200 day was a little bit higher at the time, uh, but at the open price, the 200 day was right around that 101.30 for Disney. So we're gonna go take a look at DAL and we'll take a look at Disney. We'll start with DAL. So I state 34 was a level. Now the 50 day, if we remember the sticky note from yesterday, the 50 day is sitting right around 35.10. I respected the 50 day. I felt the entry that I have, this does have a clear ascending channel right here in a sense. There's your ascending channel. I respected the level, and I did not reload 34 flat. But as you can see, wick low on the day is 33.89. So let's go over to a 15-minute chart and look at how this acted. You can see you get the gap down, it tries to retrace to the gap, and we get down to this 34. So on this candle right here, we get to a low of 34.05. On the next candle, 34. Now let's say you didn't have an order off 34 flat. Obviously, this red engulfing to the downside is not the greatest look. And now you can see that's trying to hold this 34 flat. As we reclaim 34, you can see these wicks are going in 34 flat. And it's just been an upward trend. A 34 flat would be 45 cents in the money, and I think justifiable uh, for respect of this ascending channel. But end of the day, this is still kind of early entries with this name, as relative strength has never really given you that clear positive break. So this is a name that I'm looking to hold. As I think that we can have more continuation. If it has to trade back down uh, to the uptrend before it makes a move to the upside, I'm just going to be looking for a higher low confirmation. If it can show me the confirmation of a higher low, and this will eventually end up being a neckline break. So if we get a price direction down here, and then we start to ascend upward, this is actually going to end up being a neckline break. Now that it's tried to break that 50 period, if it can truly break that 50 period, I think that is where we're going to get a higher move to the upside, where I'll respect in front of 36. You got a flat top gap right here. Just respect the level. And then I think you can actually even get higher moves into this 37.25 gap and also the previous low and to the upper 36s right there. So those are where I'm looking for target outs, as I would expect that to meet in with the top end of this channel in some way, shape, or form. But those are only for trims. I think it is possible that we can potentially get back up to these highs, these previous highs, and who knows, potential is endless from there. But all in all, this ascending channel, more than likely, this is the uptrend that you'd want to have marked right there. Uh, is that a true ascending channel right there? It's tough to say because you don't have the most points of contact right there. But DAL, um, a little bit of positive coming from some of the call outs from this morning. The next one that we'll go over is Disney. Now, Disney is sitting at th this is a relatively strong name. So this was one that, it if you're taking just a mere positive break over here, your entry's sitting in here at this 100. But all in all, the original entry that I have is a positive break back in January in the mid 90s. We trimmed it on the way up. We actually had an after hours fill on Disney on the earnings date up to these gap fills. So this 122 gap is one that I had marked, and this was an after hours fill that we got on this name. Now everything after that is just merely just respecting the positive break. Okay, you have two nice green candles right there. Okay, temporarily it broke that 200 day. but still respecting the levels that you want it to close above, and it's a relatively strong name. And we have another week or so before we actually have to worry about the earnings report with this name. Uh, Also worth noting that this did have a clear descending channel right here that it broke with two green candles, and all I see with this wick right here is it's wicking into the top of that downtrend. So yes, the 200-day did break, but I don't think that the battle on this name is going to be over yet. Simply, okay, it broke the 200-day, but relative strength is there, and you broke through a downtrend that you have set right here, and you have the clear downtrend at a much higher price. You got some gaps that need to be filled up here as well. 105 is going to be respected. You got a flat top gap right up here, and you got another gap fill from the earnings date as well, up at 110. This is going to be trim windows all the ways up, and I think looking forward, this is a name worth keeping your eye on. So that was Disney. The next name that we got to keep an eye on, this name's been mentioned back-to-back days on the sticky notes, is the SQQ on watch. Now, I did trade some more of the SQQ today. Yesterday, I took some shares in the SQQ that were red. You know, yesterday's sticky note noted that expect that position to be in the red simply because you can see the relative strength still down here at negative 81 is worthy of insinuating that, you know, expect more downside pressure. And one of the sticky notes that actually we'll go over that later. Let's go over the entry that we had on the SQ today because a lot of green volume came into the SQ. This was a significant move right here. And I know there's a lot on my chart right here, so I'll try and break this down. This is the opening candle. You get the gap up, it wicks through the gap. I did take the breakout at 29.20, somewhere in this range, and we did put an order off this previous high at 29.10. This line's at 29.07. So you can see we do wick through the 29.10, and we get pretty good action right here. Now, this is something that I'm trying to hold as some type of early entry, but you can see multiple green candles with increasing volume. Is this move done to the upside? I don't know. I'm not looking to add up here as I got a pretty good entry on some shares earlier right here. We also took some shares yesterday as I looked at this as kind of a neckline break. So when we back tested that neckline, this is where I took the trade on this name yesterday. You know, those shares were in the red. But I didn't give up on this name as, you know, this had nice three green candles to the upside to close the market yesterday. Now you can see the consolidation. This is in a sense is a nice bull flag because you get light volume following this volume increase. Now when you take out that high, this is the opening candle of the day. You see how the volume exceeds that the pull for your bull flag over here. This is what put this name on radar for me early in the day, and why I wanted to buy that previous high right there. And another main reason for that is you were able to break through these previous lows right here. So yesterday I took a trade off of the back test of this neckline right here, and you can see we reject it. Now when we reject it, we put this wick into these lows, but at the end of the day, it's able to trade on top of these previous lows right here. And when it traded on top of those lows, that's where we got the increased volume. This is why I like this name going forward. All in all, is the top end for the Nasdaq? I have no idea. Uh, I'm just a guy. But at the end of the day, I do think that some names are a little bit overvalued. And, you know, down here, I like where it's trading at, and I think it's reasonable to have this as your portfolio, in your portfolio as some type of hedge. And that's how I'm playing it. I'm looking at this as a hedge to positions in my portfolio. So that was some positive to go off of today. Looking more in, so that's the opening sticky note. Now we're going to go to the next one where I say stay away. SoFi, they reported earnings a couple days ago. A lot of share dilution. A lot of people were happy about the numbers, and I said don't let 5 flat fool you. Now 5 flat, this is an interesting level because over back in January when you get this high move to the upside, this is your positive break over here on this candle, and this is where we're trading at today, it just so happens. So it's an interesting level that's at, and why I say stay away for right now is just let some of the kinks work out. Let the price work itself out because the relative strength is so weak right here. And off the earnings day, where I wasn't a fan of the earnings simply because they diluted another 6.7 million shares, and obviously the market didn't like it either because we broke this uptrend that I would have expected this uptrend to hold. You already had 3 points of contact. If it held yesterday, I would have been okay buying it at a higher price, but clearly the market didn't like this name. It does have a nice wick low that it wicks into some of these previous high supports, but you do have this open gap fill at 462. If you really love the name and you really want to buy it, 462 could be justifiable. You have probably some decent support built in there with the gap. But I also state on the note, don't let 5 fool you. Weak name. Wait for 450 to 425. Why do I say that? It's just the bottom support right here. If this name has a chance to go to the higher side, this 425 lows right here is what you want to see hold. Uh, Wait for it to act at that level. If it shows that buyers are there, okay, maybe you can think about taking a trade on it. But for me, this is a name that I'm just going to stay away. So that is why I made a sticky note for the name. Moving forward, now this was a little bit later in the day. All these first few notes right here were pretty much at the open. This was a midday. I said Nasdaq long. Yes, it's bloody, but the Nasdaq is strong this year. Odds the top is in is unlikely. Let it calm down. Reload the longs. So there was some blood in the market today, and more in particular, I'm just gonna go over to the Nasdaq composite right here. Here's your Nasdaq. Now, just yesterday, this got done wicking near these highs right here. Uh, so the odds of this being a top, this is built a pretty decent flat top gap or a flat top break right here. If the price is able to break over top of this, more than likely my Nasdaq short is not going to be doing very good. As you can see, relative strength is still strong. The Nasdaq is still strong, which is why, some people probably need to pump the brakes a little bit. The long to me is still good until more weakness comes into the Nasdaq, as it is still holding a pretty good uptrend. You have a nice higher low that meets in with the low, and you're still holding this uptrend right here. The odds of this just building a wedge pattern to this before we eventually get a higher breakout and then probably a retest of this flat top is more than likely, especially when you got some of these gaps that need to be filled over here. Now, this is where I'm looking to probably build out my short position a little bit more at these types of areas if we're able to get a leg up, which is why in this note all I'm saying is that just because today's bloody doesn't mean that tomorrow is going to be bloody or the day after that's going to be bloody. I know tomorrow economically is a big day. We got the Federal Reserve coming, is going to announce either I'm pretty sure it's going to be a quarter point. Some people think it's going to be a half point. Some people are even saying there might not be a rate hike at all. I don't know about any of that. All I know is that the Nasdaq is strong, and even looking back to last week, you have a couple gaps in right here that still need to be filled. So if we do trade down to this level again, more than likely I'm going to be trimming my Nasdaq short, and this is where I'm going to be looking. Let it calm down. Probably start reloading some of the positions in here. You can see that it's already leaving some of a wick. So back half of the day, if I go to a 15-minute chart right here, you can see that there is still some demand and some people still like the longs going into this. But when I say let it calm down, you see how relative strength still sitting here at negative 51. Well, now it's actually getting ready to take out this wick top right here. So I would say that the Nasdaq is catching a little bit of a bid right here. Uh, but let this relative strength get up to the positive, and then let it develop some levels that you can trade off of, and then potentially you can find some longs that you like and get back into the longs, uh, hopefully at a cheaper price. If you cut some positions, getting in at a cheaper price is sometimes good. If you didn't cut a position, maybe if you had capital that you opened up elsewhere, maybe you can add to some of those positions if the Nasdaq continues to show strength. So that's kind of just like a sticky note to, help people just feel a little bit better about a bad day in the market. As I until like true weakness, like today is nothing. in terms of being a bloody day, today is nothing compared to what it's going to be one day. In my eyes, that's my opinion, of course. I have a right to that opinion. You have a right to an opinion. To me, a bloody day in the market is going to become in one day. Whether that's, this week, next month, next year, I don't know. I don't know. Like I said, I'm just a guy. Just a guy. So going forward, then we posted a couple sports bets. We'll go over that later. And right here, I just simply state these types of days, test your buttons. What's done is done. Learn from it. Stay positive. So me looking at a couple of the trades that I took today, and you look at PayPal where I state, 72 gap is your downside risk, and it wicks through that, and that ends up being near the low of the day. That's something that I can learn from. The SPG, the Simon Property Group, cutting the entire position when I just started the position a couple days ago. Sometimes taking a loss sucks. Um, but it's something that I can learn from, and I'm going to try and stay positive from that. So, yeah, just trying to keep positivity with what I'm trying to present to you guys. And the last sticky note that we posted for today was OST. It's a small cap crapper, is a term that some people use, and it's not the term that I invented by any means. And I'm just waiting for a neckline break. If it can show me that I can get back over 105, this is going to be a trade that I take. And I state, don't get caught bag holding. So if you take a neckline break at 105, and it ends up giving up one flat, let's say, I don't think it's a name that you should uh, uh, just hold for the next coming months or years or anything like that. This is simply something that I'm looking for a day trade. So we'll pull up OST. Now you can see we're actually sitting at a 104. So it is catching a little bit of a bid at the back half of the day. So maybe we can take a live trade for you guys right here on the market. If this wants to show me that it can push over that 105. My line's set at 104, but more than likely, I'd want to see it get over this 105. Now, looking at the daily of why I like this type of trade. Now, the first thing I'll say, this is not a large volume type of play. Uh, the 1.7 million is not very much volume, and even the day before that, only 875,000 in volume. But one of the main reasons why I like this trade is because you got a fresh positive break. Voice crack. You got a fresh positive break, and over here it puts it. If I still have that up over here, I don't. So let's go pull that up so we can see some of the levels that, I think it's kind of just working out the kinks, but why I think it's representable of a trade is I got it pulled up over here now. So let's pull this over. Here's your level. So here's your open price on the day, and it rejects your 200 period off the rip. But now that I can see a little bit of information, you can see here's your gap up. So you're looking for 99.5 to have gap fill buyers from the gap up. Fills the gap. Is it going to be able to work out these levels? I can also see that over here, 101 is in a sense a neckline in itself on top of the neckline break at 105, and I can see the price is at 106, so I could be going over the enter into this trade as we speak. But those are some of the levels I think that eventually with this trade, obviously trim on the ways up to this and respect this 200 period, but if this were the takeout day's high price at 130, that is a lot of room to the upside, going off of this 104 right here. If I were to just take percentage to that day high price, that's a 25% move, where you do have some resistance coming in over here. So obviously respect these levels. Uh, you could actually even respect up to 109. So let's say you take the trade right now and it runs up to 109. We go back over to a 15-minute chart. You see it's already built that some resistance in there, and if this is a retracement, I would definitely respect 118. That 702 can be deadly, but you can also respect in front of 111. You can respect in front of 115. You can respect 121, which actually is your 200-day moving average. So yeah, this is a trade that I'm going to be looking in. I think when I posted this, all it was doing at the time, it was holding these lows right here. But you can see as it's holding these lows, you can see your positive strength only gets down to 9. So it's still a positive strength name on the 15-minute chart. And now we're starting to get this curl up, and this is getting very close to that neckline break. If this retraces down, let's say 102, and then exceeds over that 105, this is a trade that I'm probably going to be looking to take. Am I going to take it on the back half of the day and hold it into the close? And I don't think that's a trade that I actually even want to take. So maybe this is one to watch for tomorrow. Maybe we get a gap up and it trades back down to this 105, and then we take the trade there. So this is going to be one that I'm watching tomorrow for sure, and it is on the watch list. So that does complete the sticky notes posted for today. Um, who knows? Maybe I'll post another sticky note, kind of reiterating what I'm seeing with OST, but that is a trade that I have on watch. So now let's go over to some of the parlays that you take. Now Phillies, they are underdogs. I just like the odds with them. When Phillies underdogs, they are versing a good team in the Dodgers, but uh, Strom is a very good pitcher and he's posted pretty good numbers. And I like the pitcher matchup. He's going up against Urias, who is one of the better pitchers for the Dodgers. Uh, but um, the Cubs were able to show him. So I actually watched the game live, and I think it's possible that we see the Phillies win this one outright. Can they win by two? I don't know, but I think having a plus 220 and a three leg is where you're getting those good odds. The second one in this is the Mariners, Oakland. Now the Mariners have a first time starter for the year. So I am expecting runs to be given up from him. Normally, when people have their first start of the year, they aren't lights out perfect. The Oakland A's pitcher, I believe his ERA was sitting around 6.5, so he's known for giving up runs as well. I think the over at 8 is justifiable of adding this into the parlay. And then the last one on this name is the Twins to win by 2. They are on the road, but Michael Kopech has gotten shelled all year, and Joe Ryan has pitched really good. I think he has an ERA around 2.7. So I do like the Twins on the road against the Sox. So I am excited to see this parlay pan out. The second one is a same game parlay. Four legs, 14 to 1 for your odds. Seattle Mariners to win by 3. I think Seattle Mariners are a much better team than Oakland. Yeah, they are on the road. But as I stated, the only worrisome about taking Mariners by 3 is the first time starter. So that's what's adding into getting a little bit better odds. Now I could have just took a money line, but that doesn't do good for the odds. So I like to try and push my odds higher, which I know it's not popular to sports bet in that way. But at the end of the day, you're either going to be right or you're going to be wrong. If I am right about this, having them win by 3 adds a lot better to my odds. Now I do take the over again, so I took over on this name twice. So if the under hits on this, both of these parlays are going to be bad. But as I stated, I like the over for this game simply because the Mariners have a new pitcher going, and the A's pitcher is known for giving up runs as well. The player I added in for bases, he needs to get a total of 2 bases. Jarred Kelenic, one of the up-and-coming stars in the game in itself, but it is a lefty going up against a righty, so I'm looking for Jarred Kelenic to be able to play a little bit better or have better odds of getting those 2 bases because it's a lefty going up against a righty. Now this is the one that normally ends up screwing you over, is taking the over or the under in the first inning, because obviously anything can happen in baseball. Maybe you hit the ball hard but you hit it right at somebody, and maybe no run score in the first. So it's tough to say, but I do like the runs in this game, and if the over in the first inning can hit, that also adds to the over 10.5, as you score runs in the first inning, you're looking for a higher scoring game. So that is the second parlay that we posted. Whew, catch my breath a little bit. The third parlay we posted was the Orioles. Now the Orioles are on the road against the Royals, but the Royals are no good. Uh, and the pitcher matchup was clear. They got Wells on the mound, and I think he has like a 2.7 ERA versus like a 6 something ERA. So pushing the Orioles to win by 3 obviously adds a little bit better odds to the parlay. The second one I took was Astros at home. I like Astros at home, but more in particular, the Giants play really bad on the road. I think their road record is 3-10 on the year. I could be mistaken with that, I could pull it up, but nonetheless, they do not play very good on the road. They do have I can't pronounce his name, so I'm not going to try. They do have one of their better pitchers on the mound, so this is a good pitcher matchup. The third one, Brewers. Uh, in fantasy, multiple years I've had Freddie Peralta on my team. He's a really good pitcher, and I think that the Brewers can win by 3 on the road to the Rockies because the Rockies are also no good. So I like the Brewers in this game. Can they win by 3? Obviously, if I took a money line, I'm not going to be able to get better odds. But all I gotta do is be right once. So having a 3-leg parlay, almost 11 to 1 odds. I like all 3 of those bets for baseball. And that completes everything that I posted today. Let me go pull over the OBS and see if. Oh, we do have some chats. What's going on, H? Okay. Let's see. Gee, I gotta get better at looking at the chat. Okay, I would watch SoFi for student loans opening up in June. You know, that could be a potential catalyst. I'm sure they probably said something about that um in their earnings report. I didn't read multiple of the details. The main thing with SoFi, now I can pull this up on here. Financials, do they have their latest quarter? They don't have their latest quarter in right here, but I remember the number. So you can see the share dilution. Now, me as an owner, this is making the pie larger and larger and larger year in and year out. And you can see the year over share dilution in this name, 75%. This isn't a name uh, that is even profitable yet alone the share dilution that they have on top of it. Now, in the recent quarter, they go from 923.18 to 929 and change, and issued over 6 million more shares. So, with that being said, you know, the pie is getting bigger and bigger and bigger. So that's why it's a name that I wouldn't trade in particular, simply because it is a relatively weak name. On top of that, when we go to the daily, you can see relative strength down here at negative 208. That is not something uh, that I would look to trade. You also say the video quality is great. That's awesome. Sound is great. That's even better. I like that. Another green day on hour for me. I will be building positions to the summer of those dividends. Schwab, Bank of America, and MS. I didn't look at Schwab at all today, but Bank of America was on my radar today. I'll look at a few of these tickers. And you see nice wick. I didn't panic on BAC. This is a long play for me and still just relatively small size. Uh, but I am probably going to respect this 27.15 gap, and if I'm lucky to get this name in the mid 20s, I'm going to be pulling the trigger on it for sure. Uh, Good question there. Schwab. So looking at Schwab, you know, kind of the same chart setup as BAC. They do have a dividend coming up. I'd have to look deeper in the Schwab, look at that recent earnings report and see a couple different things. And then Morgan Stanley was your other one that you mentioned. You know, it did wick through this gap today. If you were a gap fill buyer of this name, you know, you're probably a little bit happy on the day.
I've been watching all the banking stocks and CPI. I think the one I had brought up in the needs to pull back more. Uh, yeah. Um, I don't know if you're still there. You're probably not still there. Uh, but yeah, this that was everything that I wanted to state, and I would go to my one sticky note, try and learn from mistakes, try and stay positive, and there's always another trading day. So we will be back here tomorrow at 2 o'clock. I appreciate you guys for tuning into the stream, and we will see you on the next one.